Welcome back to Fast Market. I'm Alex Coffey alongside Kevin Hinks. A lot going on in the overall market, but we're going to take a step backwards here and look at the earnings names the rest of the show, focusing in here now on AutoZone as it has earnings tomorrow morning before the open. Joining us here in studio is TD Ameritrade Network contributor Jenny Horn, and from LikeFolio.com, the co-founder Andy Swan is with us. Guys, I'd imagine, and I'll hear from you guys, I guess, in just a moment, but this part of the market, this kind of do-it-yourself car parts market, is probably done okay given there's a shortage of vehicles out there. So if you are stuck with the one you have, I'm guessing you're probably fixing it.
Yes, and you've seen that sort of reflected in all of these sort of auto part retailers like an AutoZone, Advanced Auto Parts, O'Reilly, and even anecdotally, Alex, I've talked on this show for now, I think, 2.5 years about how I don't have a car, so I can't relate to this conversation, and I finally am pleased to say that I have a car. I mean, I'm borrowing my brother's while he's at college, but I did drive to work today, so after a very long time of me complaining about not having a car, I can say I can possibly be visiting an AutoZone in my future. But this is a name that's seen some pretty incredible growth, not only in the last year, like Alex mentioned, with this sort of do-it-yourself trend, but also when you look at it over the last decade. I mean, it has returned an average rate of about 400% over the last 10 years, which is actually outperforming the S&P 500 by about 100%. So if you're an AutoZone shareholder, you're not mad about that return, of course. But like Alex mentioned, they have earnings tomorrow before the bell, and they've seen this very strong growth record. They've posted earnings beats in the record earnings in the last 2 years, but they've also been able to grow their revenue over the last decade at an average rate of about 5%. So again, showing that consistent growth that investors very much like. But what is interesting about all of these auto names collectively is there's sort of a skewed market with these auto part retailers. The top 10 auto part chains have increased from their market share from about 44% in 2009 to over 55% as of now. So that just means that with some of these dominant names like an O'Reilly, like an AutoZone growing, they're driving out some of these local smaller businesses, which has then led to, they can offer more competitive pricing. And they also, with driving these companies out of business, they actually only continue to dominate the market share. So these are names where there's only a few players in the space because they just sort of get rid of that small local business. Whether that's a good thing or bad thing depends sort of how you look at it. But right now, with the last year, we've seen such strong demand for these used and new vehicles and rental cars and just vehicles in general. Plus, you consider that coupled with the fact that we had stimulus added into the economy, AutoZone has fared pretty well. It's grown its revenue about 7% this year and its earnings about 13%. Now, its primary growth of growth was its commercial business, which shocked me because typically we talk about the do-it-yourself aspect of this business. But last quarter, its same-store sales increased about 30%. And this was due to a 40% growth in its commercial business. So that is right now its fastest growing segment, which is something sort of different than what we've sort of historically talked about. But what is interesting is with this used car market and regular car market just being so difficult, because right now the pricing is so competitive, a lot of people have turned to just, fixing up their cars instead of potentially buying a new car. And that is sort of what our first tweeter talks about, where you can just fix your current car instead of, say, getting into what is right now the hottest car market. So our first tweeter today says, I am buying O'Reilly and AutoZone October calls today. Someone has to fix up those pricey used cars. Both seem to be forming a rising base at this time, and AutoZone earnings release is the 21st of September. So, Andy, we have talked about how you have seen car lots just full of cars because they don't have chips right now to sort of operate. And so I think I'm sort of the perfect example of this, where instead of buying a new car or even a used car, which was absolutely ridiculously priced, I'm just using my brother's car from, I think it's from about 2002, but hey, it gets the job done. So I'm curious when we talk these auto retailers, because I know that they are not all created equal, but I can't imagine that they're all sort of benefiting from the same trend.
Yeah, it's definitely a story about trends, driving these companies. In fact, I can't really think of how an AutoZone could have set things up any better for 2020 and 2021. To see stimulus checks going out to people, to see used cars getting hard to find and getting expensive, everything really pointed to them having a really good year, and it continues. It continues now because of the chip shortage, like you pointed out. And when we look at AutoZone, we do see year-over-year drop in overall consumer demand. It's down 37% on a 90-day moving average, but that's off of pretty high levels in 2020 when stimulus checks were coming out. They've definitely had a good summer, and when we look at AutoZone compared to peers, it's really interesting. They aren't doing a great job of making their customers happy, at least in terms of LikeFolio data. O'Reilly Auto Parts, AutoNation, each doing significantly better, but it's the size of AutoZone that's really come through for them during this time. People are fairly desperate to get their car fixed, and they'll go wherever they need to. So there's a lot of people going to AutoZone, but they're not necessarily having a great experience. So we think that could be painful for the company long term, but for now, they're definitely benefiting from the fact that they're the biggest, they're the best, they're in the most visible locations, and that's just kind of where you go right now. But the customer experience that they're delivering right now, not so good. So I think they could have a decent quarter. We really don't see a whole lot of real edge here. But long term, I am worried that they're bringing in customers that are leaving the storeroom, shaking their head, wishing they'd gone somewhere else.
All right, first and foremost, anybody want to have a pool from when Jenny Horn stops talking about Uber and their high prices and starts talking about gasoline prices and filling up her tank? When does that switch happen? It's coming down the pipeline. Everyone knows it.
Quickly, too,
Suddenly,
Kevin.
Jenny Horn's going to walk in and go, what about gas prices? So, Andy, so I read about AutoZone, and I read about the things they're doing, including not only riding the wave of used cars and do-it-yourself, but also lowering operating expenses and getting a digital and mobile app and getting a mega hub to help with fast delivery to professionals and all the things they're doing. And this company seems to be extremely well run. It kind of gave me the feeling that they were the target of do-it-yourself auto parts. But then I listen to Andy Swan, and he tells me something different. Where am I missing? Because when you read about them, you do research on them, they seem to be absolutely killing it in terms of a busy market, lowering expenses, adapting to digital, even in auto parts. Andy, what are they doing wrong?
Well, what they are doing right is executing at the expense level. I think they are reducing expenses.
Yeah.
They're growing. The company's growing. So I think from an execution management standpoint, probably really good. And that shows the last 5 quarters, I think they've beat on earnings and revenue. So this is a company that executes well. What I'm saying, though, is long term, when you see a huge influx of new customers and a lot of demand coming into a store like AutoZone, to see it underperforming its peers in terms of consumer happiness tells me that it's at least possible that all of these improvements, these expense cutting measures, these efficiencies may actually be trickling through to the customer experience. And so while you can put up great numbers during a macro tailwind surge like we have right now, where are those people going to go when they aren't as desperate, when they've got a little more time to shop? I think that the AutoNations and the O'Reillys putting up better customer happiness numbers at least gives them a chance against the big guy. And this is what we see a lot. It takes a while for these types of things to play out, but I am a little worried that AutoZone's doing so many things right on the efficiency side that they may be leaving customers in the lurch a little bit.
Andy, this seems to me, and I think that this data may be pushing on this a little bit. This has always been, at least for me, there's been a stigma on this industry because I feel like they have a reputation of, let's say, taking advantage of some who don't necessarily know what's going on with their vehicle. And I was going to say, maybe that puts pressure on our perception when we talk about these companies. But what AutoNation and O'Reilly are doing really pushes back on that narrative. And it really seems to be that maybe they see that and they're trying to overcome that and doing things from an experience standpoint that maybe AutoZone needs to take credit of. And I think that's ultimately what you're getting at here. So What is, I guess, generally what those who are unhappy with an experience with AutoZone are saying?
Oh, they can't find what they need. They didn't get the help. It's mostly a customer service issue. And when you walk into some of the other ones, the customer service can be exceptional. So the big threat to the others like AutoNation, O'Reilly, Advanced, the big threat to them is that they become a showroom, and that's the place you go when you want to talk to somebody and you want to sit and you want to figure things out. But then AutoZone beats on the price, and you can order from your mobile app right there. That's the big threat, I think, to this industry. It's kind of the thing Best Buy had to overcome there for quite a while. Was great customer service is great, but you still have to convert the customer into the product there on site. So that's what's going on. The bulk of the customer happiness problems that we see at AutoZone is customer service and the lack of ability to find or figure out what I needed.
So, Andy, I'm curious because short term, it sounds like you're a little bit skeptical just based on the consumer experience. But long term, is there any concern that these stocks collectively are sort of in somewhat of a bubble? Because this car market right now is very unusual. So I have to think that when things normalize, say, the cars in that lot you see start going out more and more, people won't have as much of a reason to say do it themselves or, want to replace a lot of their old parts in their cars because say they could now afford a new car. And I think there's something about DIY. I know it is a long-term trend beyond just this last few years, but I have to say something about it always kind of scares me because these are cars. It's not quite like, painting your house. It's a little bit different when you're operating a motor vehicle.
Yeah, it is. And, I think that there's a possibility that it's a little bit bubble-ish in terms of, do-it-yourself and auto repair. But we do see a lot of consolidation in the industry. We see body shop consolidation is happening. The problem with a lot of what's going on long term for these do-it-yourself type of stores is that the cars are so complex and they're getting so incredibly complex that it's almost impossible for a non-professional to actually do it themselves. In fact, a lot of times the body shops have to give up on a lot of brands in their local area. The local body shops won't even touch some brands of cars because it's too complex. And so I think that the electronification of cars is another big threat to these companies. So I'm with you a little bit. I think we could be a little ahead of ourselves industry-wide here.
Andy, we'll leave it there. Good stuff. As always, the co-founder of LikeFolio.com, Andy Swan, thanks for joining us.